Welcome to another deep dive. Today we're going to be looking at Techno Electric and Engineering Company Limited, TTECL for short. You sent over their annual report and an investor presentation, so let's crack them open and see what we can find.
Sounds exciting. I'm ready to get energized.
Me too. We'll start by getting a sense of TCL, their history and their background, and then we'll zoom out to look at India's power sector and kind of its future potential. You were particularly interested in premium growth and combined ratio and all those financial metrics, so we'll be sure to break those down as well.
Great. Let's get started.
Okay, so right off the bat, something that jumped out at me from their annual report. They have a bunch of employees who've been with the company for over 25 years, over 450 of them. That's some serious dedication and experience, right?
It's remarkable, really, when you think about those employees. They've witnessed India's power infrastructure transform over decades. So that depth of knowledge, that's invaluable. It means TKQL has this really deep understanding of the market, which could give them a real advantage in anticipating, future trends and stuff, something you'd want to know as a potential investor.
Right. It's like having a team of seasoned veterans, guiding the ship.
And speaking of expertise, their annual report also highlights that. They're not just building power infrastructure, they're also operating and maintaining it.
Exactly. That's a key point.
Yeah.
They're involved across the entire life cycle of power infrastructure, from design and construction all the way to running the whole thing smoothly. It basically makes them this one-stop shop for clients and also just shows their commitment to the long haul.
Yeah, it signals stability, right, for an investor.
Totally.
Okay, let's unpack TKL's business a little further. Their ETC services, that's engineering, procurement, and construction, really caught my eye. They're involved in some seriously cutting-edge projects. Yeah, I agree. Their EPC portfolio is really diverse. Like, for instance, the Bokaro FGD project. FGD stands for Flue Gas Desulfurization. It's a technology that helps reduce emissions from coal-based power plants. So essentially, they're helping to make power generation cleaner.
It's impressive. It's like they're finding ways to meet India's growing power needs while also being mindful of the environment.
Precisely. And it's not just about FGD either. They're also at the forefront of building high-end transmission infrastructure, including high-voltage direct current transmission, which is crucial for transmitting power over long distances with minimal loss, especially important as India expands its renewable energy capacity in remote areas.
So they're really thinking ahead. Speaking of expansion, their smart metering business is booming, right?
Yeah.
They've already installed 3.5 lakh smart meters
and
have contracts for millions more.
Yeah, and it really shows you just how much the Indian power sector is evolving. Smart meters provide this real-time data on energy consumption, giving both utilities and consumers more control. This can lead to greater efficiency, reduced waste, and a smarter grid overall.
And get this, they're not stopping there.
Yeah.
TCL is also diving headfirst into the world of data centers.
Oh, really? That's fascinating.
Yeah, they're partnering with Railtel to build the single largest deployment of edge data centers.
Yeah.
Across 102 cities in India. They're also building their own data center in Kolkata.
Wow, 102 cities. That's incredibly ambitious.
Right.
What do you think is driving this move?
Well, think about the growth potential of India's data center market.
Right.
With the digital adoption skyrocketing and the government pushing for data localization and the arrival of 5G technology. The demand for data storage and processing is through the roof. TCL is clearly trying to position themselves as a major player in this space.
So just to kind of recap here, TACL is this multifaceted company with a really strong foundation in India's power sector. They're not just keeping up with the times. They're actively trying to shape the future of energy and technology.
Couldn't have said it better myself.
Yeah.
Now, to really understand TKL's potential, we need to zoom out and take a closer look at the Indian power sector as a whole.
All right, let's switch gears then and dive into the broader industry landscape. Get ready for some electrifying insights, because India's power consumption is growing at a staggering pace. We're talking a 5.40% annual growth rate in total electricity consumption.
Wow, those are some impressive figures. What's fueling this surge in demand?
Well, there are several factors at play here. India's rapid industrialization and urbanization are definitely key drivers. As more factories are built and cities expand, the demand for electricity just increases exponentially. And we can't forget about the ever-expanding digital economy, the explosion of smartphones, the Internet of Things, cloud computing. It's all contributing to this massive energy appetite.
It's like a perfect storm of growth and development converging to create this enormous demand for power.
Exactly. And it's not just about meeting today's needs. It's about anticipating tomorrow's. India's population is growing, and so are their aspirations for a better life. This translates into a greater reliance on electricity for everything, from basic necessities to a connected digital lifestyle.
So what's India doing to address this growing demand and ensure a reliable power supply for its citizens?
They're taking a multi-pronged approach. First, they're investing heavily in upgrading and expanding their power generation capacity. This includes adding new power plants, both conventional and renewable, and modernizing existing infrastructure. Second, they're focusing on improving the efficiency of the power grid itself, reducing transmission and distribution losses.
You mentioned renewable energy. India has some ambitious goals for greening its energy mix, right?
That's right. They're aiming for 50% of their generation capacity to come from non-fossil fuel sources by 2030. This includes solar, wind, hydro, and nuclear power. It's a major commitment to a more sustainable future.
A bold move indeed. So we've got this booming power sector in India, and we have Techel, a company that seems to be right at the heart of it all. Now, I'm really curious to see how they're performing financially amidst all this growth.
Let's dive into the numbers then. You mentioned earlier that you were particularly interested in understanding their premium growth combined ratio and other key financial metrics.
Yes, absolutely. I'm eager to see how those translate into their overall financial performance.
Well, let's start with premium growth. Takehel's revenue has grown by an impressive 61% year over year, and they have an unexecuted order book of over 9,200 crore. That's a strong indicator of their success and future potential, wouldn't you say?
Yeah, those are some impressive numbers. It suggests a healthy pipeline of projects and continued revenue generation for the foreseeable future.
Exactly. They also mentioned a consistent 15% EPC EBITDA margin over the past 5 years. EBITDA stands for earnings before interest, taxes, depreciation, and amortization. It's a measure of a company's operating profitability. What are your thoughts on this consistent margin?
Well, a consistent EBITDA margin like that is definitely a positive sign. It suggests that TC has a good handle on their costs and is generating profits efficiently from their EPC operations. This consistency also indicates a certain level of predictability in their earnings, which is usually appealing to investors.
Okay, let's talk about investment income. They recently concluded a 12,250 crore qualified institutional placement, which is basically a way to raise capital from institutional investors. How do you think they'll utilize this investment, and what impact could it have on their returns?
Well, that's a significant influx of capital. The company has outlined plans to invest heavily in expanding their data center footprint and further developing their smart metering business. This strategic allocation of funds aligns with the growth trends we discussed earlier, and if it's executed effectively, these investments could lead to substantial returns for TCL in the long run.
Makes sense. Their report also highlights their compliance with regulatory requirements, particularly when it comes to their solvency margin. Solvency margin is a key metric for companies in the power sector, reflecting their financial ability to meet their obligations and withstand potential risks. How does their compliance contribute to investor confidence?
Well, by adhering to regulatory requirements, TKL demonstrates sound financial management and a commitment to transparency. This helps build trust among investors, signaling that the company is well managed and financially sound.
You specifically mentioned being interested in their PAT, which is profit after tax and operational efficiency. What insights can we glean from the reports on these aspects?
Well, their profit after tax has been on an upward trend, indicating healthy profitability. But to really understand operational efficiency, we need to look beyond just the profit figures. It's about how effectively they're managing their resources, controlling costs, and optimizing their operations to generate those profits.
So it's about looking at the bigger picture and understanding the story behind the numbers.
Exactly. And based on the information in their annual report, it seems like Key Steel has a pretty solid track record when it comes to operational efficiency. For instance, they've highlighted various initiatives aimed at streamlining their processes, improving project execution, and enhancing their overall productivity.
All of this points to a well-managed and financially sound company. But let's not forget about risk exposure. I mean, every business faces risks, and TCL is no exception. What are some of the key risks outlined in the report that potential investors should be aware of?
Well, their report acknowledges several potential challenges. One is business continuity risk. Unforeseen events like geopolitical conflicts, pandemics, or natural disasters could disrupt their operations. Another is industry risk, specifically changes in the regulatory landscape or market dynamics that could impact their business. And of course, there's always liquidity risk, especially given the capital-intensive nature of their projects.
So while TCL's financial performance looks strong, Investors need to be aware of these potential challenges.
Absolutely. It's about carefully weighing the risks and rewards before making any investment decisions.
Okay, so we've talked about this incredible growth in India's power sector, but it's not just about keeping the lights on, right? What are some of the other factors shaping the industry's future?
That's a great question. The report highlights a couple of really interesting trends. One is this increasing focus on energy efficiency. As demand rises, it's not just about generating more power, it's about using it smarter.
Makes sense. What are some of the ways they're doing that?
Well, they're implementing things like smart grids, which use technology to better manage and distribute electricity. They're also promoting energy-efficient appliances and building codes to try to reduce consumption on the demand side.
So it's a two-pronged approach, generating power more efficiently and using it more wisely. What about the other trend you mentioned? The other big shift is the move towards decentralization. Traditionally, India's power sector has been heavily centralized with these large power plants feeding into a vast grid. But now we're seeing this rise in distributed generation with smaller, localized power sources, like rooftop solar panels, playing a bigger role.
Interesting. What's driving that shift?
Well, several factors are at play. One is the falling cost of renewable energy technologies, making it more accessible to individuals and communities. Another is this desire for greater energy independence and resilience, especially in areas with unreliable grid access.
So it's not just about large-scale projects anymore. It's about empowering individuals and communities to generate their own power. That's a pretty big change.
It's a significant shift, and it has the potential to, reshape the entire power landscape. Now let's tie this back to TCLO. How do you see these trends impacting their business?
Well, I think TKL is actually well-positioned to capitalize on these trends. Their expertise in smart metering and data centers aligns perfectly with this increasing focus on data-driven energy management. And their foray into distributed generation, particularly through partnerships with companies like Railtel, allows them to tap into this emerging market segment.
It seems like they're not just adapting to change, they're actively driving it.
Exactly. They're staying ahead of the curve and positioning themselves for long-term success in a rapidly evolving industry. Now, we've talked a lot about the positive aspects of India's power sector and TKIL's role in it. But what are some of the challenges they face?
That's a crucial question. No industry is without its hurdles, and the Indian power sector is no exception. One major challenge is the financial health of the distribution companies, or discoms.
What's the issue with the discoms?
Many discoms are struggling with high debt levels and operational inefficiencies. This can impact their ability to invest in infrastructure upgrades and make timely payments to power generators, creating kind of a ripple effect throughout the industry.
That sounds like a significant problem. What's being done to address it?
Well, the government is implementing various reforms aimed at improving the financial sustainability of the discoms. This includes measures like promoting privatization, improving billing and collection efficiency, and reducing technical and commercial losses in the distribution system.
So it's a work in progress. What are some other challenges facing the sector?
Another key challenge is ensuring grid stability as the share of renewable energy increases. Renewable sources like solar and wind are intermittent, meaning their output fluctuates depending on weather conditions. This poses a challenge for grid operators who need to maintain a constant balance between supply and demand.
I see. So they need to find ways to smooth out those fluctuations and ensure a reliable power supply even when the sun isn't shining or the wind isn't blowing.
Exactly. They're investing in technologies like energy storage systems and smart grid solutions that can help manage the variability of renewable energy and maintain that grid stability.
It seems like India's power sector is on this exciting but challenging journey. Now let's shift gears and delve into a specific aspect of TKL's business that you were curious about earlier, their financial performance.
Sounds good. I'm eager to get a better understanding of those financial details.
You mentioned you were particularly interested in their premium growth. Can you elaborate on what you'd like to know?
Sure. When we talk about premium growth, we're essentially talking about the growth in their revenue from providing insurance-related services. I'm curious to see how that's trending, both in India and any international markets they might be operating in.
I see where you're going with this. However, it's important to clarify that TKL isn't actually an insurance company. Their primary business is in the engineering and construction of power infrastructure, smart metering, and data centers.
Oh, okay. I must have gotten them mixed up with another company, so premium growth isn't relevant in this case.
That's right. It's an easy mistake to make, especially when dealing with companies in complex industries. But no worries, we can still dive into the financial metrics that are relevant to TKL's business.
All right, that makes sense. I am still very interested in understanding their overall financial health. What are some of the key things we should be looking at?
Well, we could start with their revenue growth and profitability. We already touched upon their impressive 61% year-over-year revenue growth, but let's dig a little deeper into their profitability. We can analyze their profit after tax, PAT, which gives us a clear picture of their earnings after all expenses and taxes have been accounted for.
Sounds good. What else should we consider?
Another important metric is their EBITDA margin, which we discussed briefly earlier. This tells us how much profit they're generating from their core operations relative to their revenue. A consistent and healthy EBITDA margin is a positive sign for investors.
And what about their debt situation? That's always something to keep in mind when evaluating a company's financial health.
You're absolutely right. We should definitely look at their debt-to-equity ratio, which measures the amount of debt they're using to finance their assets relative to the amount of equity invested by shareholders. A high debt-to-equity ratio can indicate higher financial risk.
Okay, those are some great starting points. Is there anything else we should be looking at?
We can also analyze their cash flow statement, which shows how much cash they're generating from their operations and how they're using that cash. This can give us insights into their ability to fund their growth plans and meet their financial obligations.
Excellent point. So we've got a solid framework for understanding TCL's financial performance. Shall we start digging into those numbers?
Absolutely. Let's see what those financials reveal about TCL's overall health and future prospects.
Yeah.
I'm ready to crunch some numbers. Okay, so we've gotten a pretty good grasp on TCL's financials. They seem to be in a really strong position.
Yeah, they really do. Their revenue growth and profitability are impressive. And, their investments in these future-focused areas, like data centers and smart metering, shows that they're really thinking strategically.
And it's not just about the numbers, right? We also talked about their commitment to sustainability, which is,
Right.
Increasingly important for investors these days.
Absolutely. ESG factors are becoming, a major consideration for investors now. And TCL seems to be taking a proactive approach to incorporating environmental and social responsibility into their operations.
It's clear that TCPL is a company with a vision. They're not just focused on today's profits, but on building a sustainable business for the future. I want to bring you, the listener, back into the conversation. What are your thoughts on TCPL so far? What has stood out to you as particularly interesting or surprising? Maybe you're impressed by their rapid growth, or perhaps their commitment to sustainability has caught your attention. Whatever it is, take a moment to reflect on what you've learned about TPL and their place in India's dynamic power sector. This deep dive has been quite a journey. We've explored TPL's history, their diverse business segments, the complexities of India's power sector, and of course, their financial performance. We've uncovered a lot of information and insights, but as with any deep dive, there's always more to explore. There are always new questions to ask and new connections to be made. So we want to leave you with a final, thought-provoking question, something to ponder as you continue your own research on TPL and the Indian power sector. Remember TPL's ambitious goal of investing $1 billion into data centers by 2030. What kind of impact do you think this could have
On India's digital landscape, could it potentially position India as a major player in the global data center market? How might it shape the future of data storage processing and access, not just in India, but around the world? These are just a few of the many questions that TCL's bold vision raises. And we encourage you to keep exploring, seeking out your own answers, and diving deeper into this fascinating world of power technology and sustainability. That's all for this deep dive. We hope you enjoyed this journey into the world of TCL and the Indian power sector. Until next time, keep exploring, keep learning, and keep diving deep.